What is the stock market bubble? What's going on, guys? That's what we're going to be talking about in this video here today. We were just part of one of the most insane stock market rallies ever, where the markets went from all-time highs, dropped 20 to 30%, and then went back to all-time highs, all within the same calendar year. And if anyone, I mean anyone, says they predicted that and saw that coming, they're lying. No one, and I mean there's not a single person on the planet I would believe. I don't care who you are. I don't care if you're Warren Buffett. I don't care who you are. I will not believe you if you said you saw that coming. So since we did see such an insane rally, we saw the markets go back up so quickly, there's some reasonable cause to think, well, is there a bubble? Is there a bubble coming? Should I cash out? What do I do in a bubble? What is a bubble? So in saying that, what I want to do in this video is I really want to educate you guys on what a bubble is, maybe some things you can do in a bubble. We're going to go over a couple of examples of a bubble. All right, so hopefully you guys get some value out of this. Hopefully you guys understand a little bit better what a bubble is after this. Hopefully it'll help you make a better decision going forward in the future. If you do, make sure to drop a like on the video. That really does help me out in a massive way, and I appreciate every single one of you that drop a like on the video. Also, if you want to see more informational content like this, remember to stick around and subscribe so you don't miss any future videos. So basically, to start off, we'll go over what a stock market bubble is, and a simple definition. It's actually really simple. It's a textbook definition, and it might be so simple you guys are going to understand it right off the bat. A bubble is an economic cycle that is characterized by the rapid escalation of market value, particularly in the price of assets. This fast inflation is followed by a quick decrease in value or contraction that is sometimes referred to as a crash or a bubble burst. So basically this means, in other words, to really simplify it a little bit even more, if that was a little bit too far over your head, it basically means that stock prices and valuations ran up for no real reason, and basically stocks and all these companies are getting bought for the wrong reasons. Stock prices might start to run a little bit, then newer investors might get some FOMO, then they'll feel the need to jump in, then more people will jump in, and basically stock prices are just going to keep running and running and running. And then basically what's going to end up happening is basically you're going to see a lot of companies with ridiculous valuations that make no sense. You're going to see companies that have like a $10 billion valuation for like what? They've literally proven nothing. They don't have any products out there. They have no consumers coming in. They've literally proven nothing. And it's going to come to a point where even if you're a newer investor watching this video, you're going to be able to look at a company, you're going to be like, this literally makes no sense. This company has literally done nothing. Why are they valued at this? Why are people paying this price for this? And then basically what's going to start to happen after that is people are going to start to realize it little by little by little. Companies are so overvalued, there's nowhere to go but down, like literally. So some people are going to start to take profits, and you're going to see a dip. Then you're going to see a little more people taking profits. You're going to see a little bit of a bigger dip. Then some people are going to be like, oh my God, my portfolio's going down. Oh. They're not going to know what to do. So then they start to panic sell. And then all of a sudden, pop. And then honestly, everything's kind of a big mess for a lot of people who don't have cash on the sidelines, who don't allocate their finances how they should be. And ultimately, it's just going to be a lot of blood in the streets. And one stock market bubble, to give an example that you've probably heard of several times. You ever read any book on stock market crashes, or maybe you've taken a stock market course, or maybe just a simple investing course, or you've just seen some videos on YouTube, is the dot-com bubble. And a lot of times the dot-com bubble is also referred to as the tech bubble, because a lot of those stocks that popped during that time per se, they were tech stocks. Basically during the tech bubble from 1995 2000, the NASDAQ gained over 400%. But by October of 2002, the NASDAQ had fallen almost 80% and actually fell 78%. So 4/5 off its all-time high, the NASDAQ ended up falling. And basically to summarize what happened here is in the early 90s, when computers first started to become more popular, computers were starting to become more viewed as necessities as opposed to luxury. It wasn't like, oh, you have a computer. This was when it first got to the point where it was like, you don't have a computer. This is when that whole digital divide thing, it just started to go away. And I believe it actually increased from 15% of people who owned computers all the way up to 35% in that early 90 period. And so more and more people started to buy computers, and there became more and more optimism around this digital age. So more and more people started to invest in tech stocks, which ultimately led to more investors getting more eager. They wanted to invest. They got that FOMO like we talked about earlier. Valuations got completely thrown out the window. They didn't care what they were paying for these stocks. They didn't care what they were paying like for the valuation. They just did not care at all. They just wanted to be in these stocks. That was the bottom line. And stocks by 2000 had reached over a 200 price to earnings ratio in the NASDAQ. That is ridiculous, guys. A 200 PE ratio on the NASDAQ, completely ridiculous. Stocks like Qualcomm had risen over 2,600%, and a lot of other large cap companies had actually risen over 1,000%. That is a really big gain and not a real lot of time. And this was happening so fast that some people were putting themselves in financial situations that really were honestly just not smart. They were quitting their jobs to invest full time. Compare it to today, like those people that just got lucky and got into Tesla at the right right time and made like a few 100% or maybe 1,000 plus 1,500% on their stock. Compare it to that and quitting their job to just go investing full time, when really they had no idea what they were doing. They just picked a good stock at the right time and they just got lucky. Employees that were receiving stock options in their contract were basically millionaires instantly. It was like completely insane. It actually blows my mind how big of a bubble this was. And a lot of companies actually suffered and didn't get through this. Companies like Pets.com went out of business 9 months after they actually IPO'd. It was insane. Companies like Webvam, Boo.com, Worldwide, and Northpoint Communications, they all went out of business. Then on top of that, a lot of companies took massive hits during this. One being Amazon. Amazon was a stock that during this time period, when that bubble popped, it was under $6. I believe it was like $5.80 or so. Granted, Amazon was nowhere near as well established as it is today, but imagine that, just thinking about that. Amazon's over $3,000 today. Imagine a point where Amazon was up and coming and it was only $6? That is ridiculous in my mind, guys. So now what we're gonna do is we're gonna talk about some things that you can do if you're preparing for a bubble, if you think there's a bubble coming, kind of all these different things. I came up with 3 real main strategies that you can go about using. Obviously, make sure you're doing your own research, make sure you're doing your own due diligence. I'm just some random guy talking to you on the internet. I don't even know why you're watching this video. You might as well turn it off. Just kidding, please like the video. Seriously, it really helps me out. Anyway, so the first strategy I came up with, what you can do is you can ride the bubble, okay? So, for example, say the dot-com bubble, you see all this coming up, you see these ridiculous valuations, you see these spec plays that have like tens of billions of dollars in debt, they have like less than $1 million on their balance sheet, all these things that make absolutely no sense, but you see it just skyrocketing. You see everything around it in that same industry skyrocketing. So in the dot-com bubble, it would be the tech industry. You see all these tech stocks just going up and up. Well, what you can do is you can ride the wave. So get in, ride it, and get out. So basically, once you see it going up, and then once you get to the point where you're like, all right, these spec players are way too ridiculous, makes absolutely no sense on their balance sheet. This PE ratio is completely out of control. Every single metric makes no sense. Price to sell ratio is completely crazy. Price to book ratio is whack. That's when you get out and you stay out until that bubble pops. Now, this sounds like the best strategy, right? Because you could easily be saying, well, I'm just gonna get out and I'll just wait till the market crashes and then I'll just get back in. Is it really that easy? Because no one truly knows what the market is gonna do. Bottom line, it's really not gonna be that easy to tell when the market's exactly gonna dip, when the market's exactly gonna crash. And chances are, if you're wrong, you could be missing out of tens of 100% of gains, depending on the stocks you're in, depending on the market you're in. But you could be missing out on some great gains if you decide to sit on the sidelines because you're convinced that market's gonna dip and crash within the next day, month, week, whatever the case may be. Obviously, if anyone could tell what the market was gonna do, don't you think we wouldn't be at all-time highs right now and would be much closer to like that midpoint? Not maybe necessarily where we were in March, but much more of a midpoint, guys? What do you think? The second thing that you could do when you suspect a stock market bubble, and maybe one's like forming or whatever the case may be, is honestly just don't participate in it at all. So you see some signs, you see some really ridiculous valuations, you see everything just going kind of wrong, there's something economically that maybe concerns you, and you're just like, forget it. Peace, I'm out. You sell off, you get rid of your stocks, you sit in cash, and you just wait and you see what happens. Now, I actually like this strategy better than the first one. If you truly think that there's a stock market bubble or maybe there's gonna be a stock market crash and you just wanna get out and cash it and sit in cash, maybe so you're better off financially, or maybe you don't have to worry about anything going down, or maybe you just can't handle it, your stomach can't handle it, your risk tolerance isn't there. I like this strategy a lot better, to be honest. Then you can just sit there, and then once you're clearly right or clearly wrong, you can just get back in. But the thing is, what if you are wrong? That's the thing. You're gonna be missing out on so many different gains if you are wrong and there actually is no bubble and that stock market just keeps going up and up forever and ever and ever. I remember reading reports back about 2012, 2013, like that area, that there was going to be a double dip recession after the 2008-2009 recession. The economy had finally started to recover. Things were looking back up for a lot of different reasons, and people were still talking about recessions. Guys, so there's always going to be someone out there talking about a stock market bubble, a stock market crash, a recession every single year. I've been hearing it every single year since I started looking into the stocks, looking into the stock market. Every single year, there's always going to be some clown, there's always going to be some fruitcake out there that knows when exactly the market's going to dip, exactly when the market's going to crash, and then when the market does crash or when the market does dip, they're going to sit there and they're going to have some report saying, I told you so, I told you so. Guys, make sure you're making your own decisions, okay? There's not going to be a bubble every single year. Now, recessions are just going to happen. They're going to happen every so often. It's just a fact. Like, if you look, there's been tons of recessions before, there's going to be several in the future. Just matters if you're in position to take advantage of those recessions and buy great companies at very undervalued prices. Anyway, so like I was saying before, I like this one a lot better than the first one. And what you could do, another idea that you could do is you could sell some of your stocks. So say you have $10,000 in stocks, you could sell maybe 5,000 just so you have that capital, maybe for an emergency, just in case you lose your job, or maybe you just want to be a little more in cash just in case there is some sort of recession. You can buy back in later. If you want to play that timing game, I don't think that's the best thing to do, but hey, create your own strategies. I'm just here to give you some options for you, okay? Then once it's obvious you are right and that market does dip, or you are wrong and you missed out on all those gains, which could very well happen. A lot of people in March did that. A lot of people in March said they wanted to wait until the market came back down. The market never came back down. It still hasn't come back down. Could it come back down? Maybe. We'll have to wait and see. But once you come to the point where you are right or wrong, then you can deploy that money back into the market. And the third and final strategy we're going to talk about in this video about if you see a stock market bubble, if you suspect one, what should you do? Basically, the strategy you should use is nothing. That is the last one. Basically, do nothing and just ride it and stay invested. Now, there's going to be somebody out there, there's going to be somebody in the comments, maybe it's you watching this video, and I welcome you if you do, because I would love to hear your argument that's going to be like,
well, Josh, the game of the game is to have my money make me money. The game is to have my money lose me money.
Shut up, Johnny, okay? Shut up. Now, this is a good lesson for new investors, okay? Because a lot of you guys aren't going to realize this, and I'm sure a lot of you don't understand this out there who don't understand the markets. So a loss is not a loss, and a gain is not a gain until you actually sell out of that. So what do I mean? So say you buy a stock at $100, right? And that stock goes down to $50. You might be thinking, well, I just lost $50. Not necessarily. If you don't sell out of that position, if you don't sell out of that stock that went from $100 to $50, you're not actually taking a loss. It's not what we call a realized loss. So if that stock goes back up to $150 over the next, say, 3 or 4 years, then and you still don't sell, you hold that entire time, you're not actually taking a loss. It's the same thing with the gain. Say that stock goes up to from $100 to $150 and you don't sell out, you're not actually taking a gain. You don't have to pay the tax on it. So you wait till it goes to 200, then you sell the stock. That's when you pay the tax on it. That's when you have to get involved here, okay? But there is one thing I do know, and this is for you, Johnny. And Johnny, you can look this up, okay? Because I know you're watching this. Time in the market beats timing the market every time, okay? If you miss the best trading days of the year because you're trying to time the market, your portfolio is not going to be nearly as good as mine, who is in there for the long haul, for the bad, the good, everything in between. But if this is the strategy you're going to use, there are a couple of things I would do. The first thing you're going to want to do is, if you are just going to do nothing and keep your investments in, is make sure you have some cash on the sideline. One, so you can take advantage of any deals you see. Two, so you have an emergency fund. You have to sell off any of your assets to pay the bills or anything along those lines. Don't do that, guys. Don't put all your money in the market. Honestly, it's just not going to work out for you, because there's going to be some point where you need money, and it's honestly going to be tough to come up with it, and you're going to be contemplated with selling those assets that you've worked so hard to research, so hard to put your money into, that you get at great prices that are going to make you so much money, and it's just not going to turn out for you for the best over the long term, because that money can continue to make you money. So make sure you have some cash on the sideline at the very, very least. The second thing I would do is, if you are invested in individual companies, make sure that you're invested in companies with strong balance sheets, okay, guys? Obviously, different recessions are going to hurt different industries. Like, for example, this year, the travel industry was very, very, very hurt because no one was going to hotels to stay, no one was getting on planes to fly anywhere, really no one was leaving their house at all. So different industries are going to be hurt. Obviously, in the tech bubble, tech stocks were hurt. So basically, you want to make sure you're invested in companies with very strong balance sheets. So in case the industry you're invested in does get hurt, they have the money, they have the cash on the sidelines to keep deploying, to keep putting back into the business, to keep feeding all those operating expenses, so that they won't obviously go out of business. And the last thing we're going to touch upon very, very quickly in this video is, should you be afraid of the stock market bubble? And should it be something you should be like constantly paranoid about, constantly thinking about? And honestly, to be perfectly honest, I'm going to say no. I'm kind of in the camp where it's like stock market bubbles, recessions, they're just going to happen over time. Like, they're going to happen every like 5, 10 years, whatever the case may be. Maybe not 5 or 10, but you get the point. They're going to happen every so often. I can't put it like a timeline on it, because some might happen. There might be one that happens every 5 years. There might be one that happens 10 years from now. You really don't know. They could happen any time. But one thing I do know is I'm betting on America, and I'm betting on the United States, and I'm betting on the stock market to come back and rally and get back to new all-time highs like it has before, like it did in 1929, like it did during the tech bubble, like it did in 2008. The market has always come back every single time. So that's what I'm betting on. I feel like if you're in a good position of power, you have cash on the sidelines, like we talked about in several different videos. If you want to be in a position of power, you want to have cash on the sidelines. If you don't have cash on the sidelines, you're not in a position of power. If you have every single dime invested in the stock market, you're not in a position of power, because that stock market dipped 30% today. That market has you by the ropes, because there is nothing you can do to take advantage of those deals, and you're just hoping and praying it goes back up. You're gonna have to sell out some of those assets that you work so hard to put your hard-earned money into, and it's just not gonna be the best situation. So no, you should, bottom line, no, you should not be afraid of stock market bubbles, but you should have some cash on the sideline. You should be ready to take advantage of great deals for great companies whenever you see the opportunity. Saying that, guys, that's going to be it for this video. Thank you so much for watching. I really appreciate it. If you did get some value out of this, make sure to drop a like on the video. That really does help me out in a massive way, as I mentioned before. If you want to see more content like this, make sure to subscribe to the channel and turn on that notification bell so you don't miss any future uploads. Let me know down in the comments what other content you would like to see on this channel. And if you think a stock market bubble is coming, if we're in right now, if you see another recession coming, whatever the case may be. And I'll see you guys in the next video.